Hi there, it's Andy Rowe on trendfollower.co.uk. I'm just going to run you through my portfolio for this week, let you know how it's doing. So I'm going to start with Victoria Oil and Gas. This has gone up a little bit this week. I'm long VOG, so I'm still actually below where I got in at, irritatingly. I got in at some crazy price, I think up closer to 2. So I've still got a long way to go before I get back to par, but I'm happy this is going in the right direction. The quicker moving average has crossed up above the slower moving average, and yeah, it looks like it's all starting to go in the right way. So that's good. And a position that's not going my way is Rightmove. You remember I'm short Rightmove, and I got in short, just about down here, and it's of course gone up against me ever since, which is a bit of a blow, but interesting, it's still below the average for the year, so essentially I would say that sentiment is against it, and it might be the case that Rightmove may turn back around and go back down again, but no way to tell, of course. But so at the moment my trade here is losing money. My stop on Rightmove is somewhere up about here. I think it's just a bit above the MA50. So if it goes up much more next week, then I'm out and the trade's dead. And what will happen then, of course, is it'll go down and go to profit. We'll see. If my trade's dead, it's dead. If it turns around and goes down the other way, then I'll be interested to follow it again. I'm not going to give up on Rightmove. I think this is an interesting barometer of the property market. Now, Amara Mining has done well, gone up nicely this week, so that's good. Keep going, guys. Newmont Mining Corporation. This is a relatively new trade. I opened this a week or so ago, and it's looking good. So it's making profit so far, which is always very nice. And if I open up the graph, you can see we're coming up from a low here, a real low, and it could go back down again, of course. But really, I see this being a trade with plenty of potential. So I'm just going to hopefully let that run and run. Now, Unite Group. This is these are the people who run student housing, and I saw this as a play both on housing and education, both of which I see potentially having a bad time, and so I shorted. I didn't actually short it. I put in an order to go short if the price fell down below I think about 386, and I think I put the order in a couple of weeks ago, and then had it open for a week, and then kept the order running this past week. But of course the price of Unite has just gone up, so my order wasn't fulfilled, so I don't have this position open, and I no longer have an order in it, so it'll go off my list. So it won't appear unless it triggers another order in the next few weeks. So we'll see. At the moment it's just sort of going horizontal, really. Evraz has gone up nicely this week, so again still slightly below my entry position, which was back in May, I think, and yeah, it went down, it's come back up again, and hopefully will continue to go up. And again, just expanding the graph out, we had a high of 450 back in 2012, February 2012, so that was sort of 2.5 years ago. We're now down at 104, so if it got up to the same price, that would be great. So we'll see. Persimmon, this was my short trade on the house builders, which hasn't gone anywhere, and I've done the same as Unite. It's gone back up above the MA50, and so I'm down on this trade at the moment. But again, my stop is I think somewhere up here, and it may be the next week it goes back down, and we'll see. So I'm just going to follow my rules. I'm going to try not to predict which way it's going. If it goes the way I want it to go, which is south, then it'll turn around and make me profit again. So we'll see. Now, this is a new trade, the Uranium Fund, and I'm a trend trader, but my opening of a position here was absolutely not a trend trade. What I did the other day was to go long corn. This is a US ETF, and I was just looking at the price and seeing that for the fourth week in a row, it hadn't gone below $25.2. And if you open up the graph, you can see that the last time it was that price was back in 2010, following which it went up very nicely. It dropped a bit, went up incredibly rapidly, and then dropped steadily down with a little bit of a hiccup down to the current low. And what I noticed was that there were 4 weeks of the low not being broken anymore, and that in recent months the volume has picked up. And you can see how as the price was rising through sort of January through into sort of April of this year, there was interest, of course, so people were buying it. Then it fell away again, but fell away more, but actually the volume went up, and that's kind of interesting to me. So in recent weeks the volume's gone up significantly, and even though it's at a low. So to me this suggests that the professionals are buying cheap corn fund, and that's what I like to see. So these people are what drive the market. It's not little minnows like me that drive the market. The market is driven by the big institutions, and when I look at the volume going up, when something's at a massive low, to me that suggests that people are sensing that it's a buying opportunity. In other words, that corn is cheap. Interestingly, if we go back to here, you can see that the price was down at around the sort of $36-37 dollar mark back in the summer of 2012, and then in the space of 2 or 3 weeks, it was going up and went up to 50. It doubled in price in about a month and a half. So it's one of those things that can change very quickly. So I don't want to be waiting for it to rise up to 30 or 32 before I buy. To me, the cheaper this gets, the better value it is. And the reason for that is that corn is a commodity. It's not a company. It's not like buying shares in Marks and Spencer's and or Tesco's. These are companies that theoretically could go broke and could go out of business, and one could have a share price that was zero. It just doesn't. It's not going to happen with a commodity. Corn particularly. We need to eat, and so corn is always going to be something that we need. And obviously the price of it will wax and wane depending on all sorts of issues, but certainly the Russia-Ukraine crisis could have an interesting effect on the price of corn. But I see this as a buying opportunity in the same way that when we look at the values of houses and how ridiculously high they are, we all wish that we bought a whole string of houses, whole roads worth of houses when prices were cheap. The time to buy houses is not when they're expensive, it's when they're cheap. The time to buy corn is not when it's expensive, it's when it's cheap. So I've actually bought ETF corn, and say it's absolutely not a trend trade, and so it really goes against my basic policy of not trying to predict the bottom or the top of the market. But here I am predicting the bottom of the market, and I've bought corn, so that's a trade for this week. So it'll be very interesting to see how it's gone. In fact, since I bought it, it's it's gone up in price, and I'm absolutely sure that's nothing to do with me buying it. So uranium, ditto. This is something that's come down and down and down and down and down, and hit a low in 2013. From which it went up and down again, but hasn't dropped back down through. And I see this as now being a good time to buy uranium. I think this sort of thing is going to be a good hedge against stocks falling. It's quite possible at some stage, quite likely that at some stage, that there'll be a collapse in stock prices. It won't be the case that I don't think that commodities will collapse in price if they've come down from a high. So I see this as being quite a good store of value. And again, looking at the volume of uranium, you can see how low the volume was for a long time, and then at beginning of this year, sort of January, the price of, the volume of trading of uranium went up, and to me, this suggests that institutions are stocking up on uranium. I hope they are anyway, so because that's what I want to do. International Tower Hill Mines hasn't done much this week. Gold miner, so yeah, it's going to be its share price is going to be reflective of the gold price. Now Raytheon, last week I put in a sell order, an order to sell if the price fell below the low of the previous week. So the price of course didn't. The price went up this last week, so my my sell order was not triggered and has now been cancelled. So again, this will disappear off my list next week. But you know, this is a nice thing about doing sell stop orders, is that, you know, you think the market's going a certain way, you put the order in saying, you know, if the price goes below a certain point, I want to be in the market going short. But if of course sentiment changes over the weekend, which often it does, then the order doesn't happen, and that's fine. So I'm very glad not to be short Raytheon. If their share price falls down again, I'll pick it up as a possible sell, and we'll go through the same process again. So you know, at the moment it's not a trade I have. Brazil has gone up a little bit this week. Good. City of London Investment Group has gone up nicely. It obviously opened up here, went down a lot, came up a lot, came back down. It's very volatile, but overall I see this as being something that I'm going to stay with going long. City Natural Resources High Yield Trust went up very slightly this week, so it's just above the MA50 and hasn't changed much. You know, it's done okay. Lloyds Banking, I'm short Lloyds Banking, and this really hasn't moved much this week. The MA30 is just crossing the MA50, so that again to me is a sell signal. I'm just going to keep the order, or sorry, the position running because the order is open. It's not in profit yet. I think I sold somewhere down about here, and you know, we're up here now, so so actually in the red, but you know, we'll see how that goes. Aluminium fell back a little bit this week, but again, overall to me the trend is up, so I'll stick with it. Perpetual Income and Growth Investment Trust. Now this was an order I'd placed to go short PLI, but the order was not triggered because I think the order was to go short below the low of the previous week, which didn't happen. In fact, the price just crept up. So that order has been cancelled. Essentially, this is the equivalent of going short the FTSE 250. So you know, this price has mirrored what the FTSE 250 has done. If you remember from my video about how the markets are at the moment, you know, it's back to neutral. So the PLI is back to neutral. So I'm not short this yet, but it may be something that I'll go short on in the next week or two. Range Resources fell back a little bit this week, but is still above the average for the year. GKN, I am short GKN, and this dropped a little bit further this week, so I think that trade's in profit. Not making lots of money, but it is in profit, so we'll see. Interestingly, volume has gone up a little bit the past few weeks, so whether that's people stocking up on GKN, expecting it to be a good figure to buy it at, I'm not sure, but we'll see. Industrial Metals fell back this week, so that's that. TR European Growth Trust, I am short TRG, and irritatingly it's gone up slightly, but not very much actually. So you know, thinking about the DAX and the CAC 40, you know, they're all doing the same sort of figure. So this is a play on the DAX and the CAC. So France and Germany and France rather, in that order. Yeah, I still think those are going to go down. Wincanton, I'm long. This went up a little bit this week after the previous week's massive drop, but you know, this is still above the MA50, and you know, hopefully we'll do fine. Kazakumi's dropped back a little bit this week. I'm long that. Centamine dropped down quite a bit. I'm long that. I'll stay long that, and that's how the trades are going. So you know, up and down, no massive changes. Just, you know, ticking along and moving my stop losses appropriately. So those of you that know how I trade will know how I'm doing that. So the aim is just to gradually lock in profits as they start to accrue, and try and let the effects of time work to our advantage. So you know, on a trade like this, you know, going long and then gradually locking in the profits, so that as time goes by and the price rises, there's a profit figure there, and when then the share price falls back down, then the trade is closed and a profit is made. That's how it works. So anyway, hope you enjoyed that. Have a great week, and catch up with you next week. This is Andy Rowe for trendfollower.co.uk.